Most traders believe the path to profitability is simple. Higher risk reward equals more money. If you risk $100 to make 300, you only need to win 34% of the time to be profitable. The math sounds logical. So you start hunting 3-to-1 setups, you pass the 2-to-1 opportunities, you ignore the 1-to-1 trades. Because in your mind, higher reward per trade means faster growth. And for months, maybe years, you stay stuck, break even, or worse, wondering why a strategy that looks perfect on paper keeps failing in reality. Today, I'm going to show you why chasing 3-to-1 risk-reward might be the exact thing keeping you from profitability, and why mastering 1-to-1 setups could change everything. This isn't about the math being wrong. The math is correct. This is about something most traders never consider. Execution reality versus theoretical possibility. Because every execution comes with its own ease or difficulty, on paper they all might look the same. But that's not true. Let me start with a hard truth. I spent 18 months chasing 3-to-1 risk-reward ratios. I'd see a setup forming. It looked good for a 1-to-1 exit, but I'd hold for 3-to-1, watching my position move into profit, then pull back, then stop me out. Trade after trade, I'd get within 20 pips of profit, then lose. My win rate collapsed. 30%, 25%. Some weeks, 15%. I kept thinking the strategy was broken, or the market had changed, or I needed better entries. The real problem was me. I was trying to extract more from the market than it wanted to give, and that greed, disguised as discipline, destroyed my account. Then one day I did something that felt wrong. I switched to 1-to-1 risk-reward. Same strategy, same setups, just different exits. My win rate jumped to 60%, then 65%. My account started growing, not because I found a secret, but because I finally understood what most traders miss. The market doesn't care about your risk-reward target. It gives what it gives, and trying to force more costs you everything. But it doesn't just stop there. Having your target higher loads unexpected problems onto your psychology. You're not just targeting more, you're also wearing yourself down more. But if you use 1-to-1 risk-reward, there's no chance of your psychology wearing down until you reach your target. The most reasonable target is your target. And this is often not a difficult target to be patient for. It feels more achievable and costs you less stress. But we don't consider these things when thinking about risk-reward ratios. The only thing we think about is which strategy produces how much profit in how much time. However, the reason it doesn't work out like it does on paper is that every reward ratio has its good and difficult sides. Considering these as well will move us one step forward. Here's what nobody tells you about risk-reward ratios. They're calculated in a vacuum. Perfect entry, perfect exit. No spread, no slippage, no emotional decisions, no holding through pullbacks, no second guessing. In theory, 3-to-1 sounds beautiful. In reality, it's a nightmare, because every variable that doesn't exist in theory shows up in execution. Let me break this down. When you target 3-to-1, you need price to move 3 times further than your risk. That means 3 times more exposure to reversals, 3 times more chances for pullbacks to hit your stop, 3 times more time watching your position fighting the urge to close early. And here's the part that kills traders. The further your target, the lower your win rate has to drop. Not just mathematically, psychologically. You start taking marginal setups because you need that 3-to-1 to make your numbers work. You hold through obvious exits because you're committed to the target. You ignore what the market is showing you because you're chasing what you think it should give you. This isn't trading. This is gambling with extra steps. This really isn't an easy process to manage, especially if you're a beginner. One of the best pieces of advice I can give you is that your strategy's profit target should be in a reasonable place. If possible, prefer 1-to-1, at most 1-to-1.5. Don't create extra difficulties for yourself by chasing high targets. So what does 1-to-1 promise us? You risk $100, you target $100. The math says you need 50% win rate to break even. Anything above 50% and you're profitable, that's it. No magic, no complexity. And here's what changes everything. 1-to-1 targets are easier to hit. Way easier. You're not asking the market to give you 3 times your risk. You're taking what it offers and moving on. This does 3 things most traders underestimate. First, your win rate increases. And trust me, win rate doesn't just mean money. Your win rate is an element that will positively affect your psychology, even if you're making the same money. And this becomes decisive without you realizing it for you to continue applying your trading model. When you're not holding for the moon, you catch more moves. Trades that would reverse before hitting 3 to 1 become winners at 1 to 1. Your confidence builds, you start trusting your process. Second, your execution improves. You're not fighting with yourself about whether to hold or take profit. The target is clear. Simple. You hit it and close. No emotional warfare, no second guessing, just execution. Third, your psychology stabilizes. Losing at 50% feels normal. Losing at 70% while chasing 3 to 1 feels like failure, and that feeling makes you break your rules. Chase revenge trades, overtrade, spiral, because the market can turn and stop you out millimeters from your target. Everyone experiences this. But in a 1 to 3 trade, when you approach your target repeatedly and finally get stopped out, the number of people who aren't psychologically affected by this situation is really small. In 1 to 1 risk management, you experience this much less. So again, as I said, you wear down your psychology. Much less. Let me show you the math everyone knows, but nobody applies. Strategy A. 3 to 1 risk reward. You need 34% win rate to break even. Sounds easy. But in reality, most traders chasing 3 to 1 average 25 to 30% win rate. Why? Because they're holding through natural exit points, taking lower quality setups, fighting the market. Let's say you win 30%, 10 trades, 3 wins at $300, 2,100 profit, 7 losses at $100, 700 loss, net, 1,400 profit. Not bad on paper. Now strategy B, 1 to 1 risk reward, 60% win rate, same 10 trades, 6 wins at $100, 600 profit, 4 losses at $100, 400 loss, net, 200 profit. Wait. Strategy A made more. So why am I saying 1 to 1 is better? Because those numbers assume perfect execution. And perfect execution doesn't exist. Let's be realistic. Here's what actually happens. Strategy A. You aim for 3 to 1. But you don't hit 3 to 1 on every winner. Sometimes you get 2 to 1 because you panic. Sometimes 1.5 to 1 because the market reverses fast. Your average winner becomes 2 to 1, not 3. Suddenly that math falls apart. Because you're human. And as your strategy's expectancy increases, executing it correctly becomes harder. The math falls apart, and 3 wins at $200, 600 profit, 7 losses, 700 loss. You're negative 100. Break even at best over time, and your win rate isn't 30%, it's 25, because you held through good exits trying to hit 3 to 1. So it doesn't turn out like it looks on paper. If you want to apply your strategy most efficiently and most disciplined, choosing a realistic risk-reward ratio will benefit you. It can be 1 to 1, it can be 1 to 2. But going above these, even if it seems logical on paper, will wear you down much more than you expect, so your chance of flawless execution decreases quite a bit. And that's exactly why backtest and live condition results never match. Because we produce processes that are difficult to execute correctly. These processes are indeed profitable on paper. But because we don't think about executing them in the best way, we get results far from their most efficient state, and our discipline suffers. The most important thing is sustainability. That's why realistic risk-reward ratios are one of the most important things for our psychology and for us to execute our strategy flawlessly. Let's look at another example. Now, strategy B reality, 1 to 1 target. You're not trying to squeeze extra. You're taking what the market gives. Your win rate stays at 60% because you're working with the market, not against it. Your risk-reward stays at 1 to 1 because you're not hoping for more. 6 wins, 600 profit, 4 losses, 400 loss. Net 200 profit, consistent, repeatable, sustainable. And here's the game changer. Over 100 trades, strategy A with execution reality might net you 0 or negative. Strategy B nets you 2,000. Not because the math is better, because the execution is possible. Most traders optimize for theoretical perfection and fail at practical execution. Winners optimize for execution reality and let the results compound. You can try it yourself and see through trial and error, but there's no need for that. Choose risk-reward ratios that won't wear down your psychology. More successful positions may not mean more profit, but more profit isn't the only thing that matters. To make this sustainable, your psychology is also very important, and your psychology is what will make this sustainable. So 1 to 1 risk-reward system can add unexpectedly positive things to you. You can also adjust this to 1 to 1.5 according to yourself. It varies depending on your level. But my advice is 1 to 1 if you're a beginner. If you're more advanced, you can index your current strategy to 1 to 2. There are also different effects. Something deeper is happening. Something about trader psychology that 3 to 1 destroys and 1 to 1 protects. When you target 3 to 1, every trade becomes high stakes. You're risking 100 to make 300. If you lose, it takes 3 wins to recover. That pressure changes how you trade. You start forcing setups. You hold through stop-loss signals. You convince yourself it'll turn around because you need that 3 to 1 to stay on track. And when you finally hit a 3 to 1 winner, you feel amazing, like you cracked the code. So you start taking lower quality trades, chasing that feeling again. It's a cycle. Big target, low win rate, high pressure, bad decisions, occasional big win, dopamine spike. Repeat until account is gone. 1 to 1 breaks that cycle. The stakes feel manageable. Risk 100. Make 100. Win or lose, you're never too far from break even. That stability changes everything. You stop forcing trades. You wait for quality. You're not desperate for the 3 to 1 to save your week. You just execute. Take the profit. Move on. And that boring, stable approach is what compounds into real money. Whether you want to accept it or not, if you really want to be more consistent, produce a solution for yourself. Update your risk-reward ratio and bring it to a more reasonable place. Rest assured, this will have positive consequences for your psychology and your future trader self. Taking more successful positions is inevitable, and this will affect you psychologically positively and will enable you to get positive momentum on your side. Everything isn't profit and loss as it appears on paper. We're in a much more detailed game, and to beat the market regularly, we need our psychology to be consistent and stable. 1 to 1 risk-reward ratio is ideal for meeting this need. Here's what I learned after switching to 1 to 1. The first month felt wrong. I'd hit my target, and price would keep running. I'd close at 100 profit and watch it go to 200, to 300. My brain screamed that I was leaving money on the table, that I was being too conservative, that real traders hold for more. But I stuck with it, and something interesting happened. My win rate climbed from 30% to 55%, then 60, then 65. I was catching moves I used to miss because I was holding for targets that never came. My confidence grew. I wasn't fighting the market anymore. I was working with it, taking what it offered. By month 3, my account was up more than any 3-month period when I was chasing 3 to 1. Not because I made more per trade, but because I won more often. The consistency compounded, and my psychology was stable. I wasn't on an emotional roller coaster. I was just executing a process that worked. Execution was much easier. Trades were closing much faster. I felt less worn down, like there was less weight on me. Because I was less worn down, I could start the next trading day more focused. This was affecting me positively in every way. The trade could fly, and it wasn't a problem. I was hitting my 1 to 1 target and closing the screen. Now here's the part that most traders resist. You're thinking, but if I master 3 to 1, I'll make way more money. And you're right, if you master it. But here's the question nobody asks. How long will it take you to master 3 to 1? And what's the cost while you're learning? Most traders spend years trying to make 3 to 1 work, blowing accounts, rebuilding, trying again, all while a simpler approach could have made them profitable in months. This isn't about giving up on growth. It's about building a foundation that actually works. Master 1 to 1 first. Get to consistent profitability, 60% win rate, stable psychology. Then, if you want, start testing 1.5 to 1, then 2 to 1. But you're doing it from a position of strength, not desperation. You're scaling up a system that works, not trying to force a system that doesn't. Let me give you a framework. If your win rate is below 50% and you're targeting 3 to 1, you're stuck in theory. You need to shift to execution. Drop your target to 1 to 1. Same entries, same stop loss. Just take profit earlier. Track your results for 50 trades. I guarantee your win rate will jump and your account will grow because you're finally working with probability instead of fighting it. Once you hit 65% win rate consistently at 1 to 1, then test 2 to 1. But not before. Build the foundation first. Here's why this works. 1 to 1 teaches you discipline without the pressure. You learn to take profit without greed. You learn to accept losses without desperation. You build trust in your process. And that foundation makes everything else possible. Traders who skip this step stay stuck forever, chasing big wins, taking big losses, never building the consistency that actually creates wealth because they put themselves under loads they can't carry. And eventually their psychology collapsing becomes inevitable, whereas if they had progressed with reasonable and realistic targets, they would have been much more profitable than they expected and in a much better psychological state. But not being greedy is hard. Being content is hard. That's why everyone wants high reward ratios. Don't do what everyone does. Realize how sufficient 1-to-1 risk-reward ratio is and how positively it will affect you in every way. Trading isn't an easy skill already. Instead of making it even harder, we should make it easier. We need to find sustainable paths for ourselves. 1-to-1 risk-reward ratio is one of them. I hope you try to integrate this into your own system. Look at the results. If you don't find what you expect, you'll quit. But please, give it a try. Observe your psychology. After you see how everything will be much more achievable and easier, you'll want to stay there. There's one more thing. 3-to-1 setups are rare. If you're only taking 3-to-1 opportunities, you're passing most of the market. You sit for hours, days, waiting for perfect setups. And when they finally appear, the pressure to perform is massive. You overtrade the setup, you hold too long, you ruin it. 1-to-1 setups are everywhere. You're not starving for opportunity. You take quality setups, you execute, you move on. The frequency keeps you engaged without overtrading, and that balance is where consistency lives. You're not bored, you're not desperate, you're just working. I know what some of you are thinking. This sounds like settling, like giving up on maximizing profit. It's not, it's choosing execution over theory, results over ego, consistency over hope. The market doesn't reward the trader with the best plan on paper. It rewards the trader who can execute under pressure, and 1-to-1 is easier to execute. Period. Every master trader I know started with simple. They built consistency. Then they scaled. None of them started by chasing 3-to-1 from day one. They earned the right to take bigger targets by proving they could handle smaller ones first. That's the path. And if you skip it, you'll spend years wondering why you're still stuck. Here's my challenge to you. For the next 50 trades, target 1-to-1 risk-reward. Same strategy you're using now. Just change the exit. Track your win rate, track your profit. Compare it to what you've been doing. I'm not asking you to believe me, I'm asking you to test it, because data doesn't lie. And I'm willing to bet that your win rate jumps, your account grows, and your psychology stabilizes. Not because 1-to-1 is magic, but because it's executable. And in trading, executable beats optimal every single time. The traders who win aren't the ones with the best theory. They're the ones who can execute consistently under real market conditions. 1-to-1 gives you that. 3-to-1 takes it away. Choose execution. Choose consistency. Choose 1-to-1. At least until you prove you can win with it. Then, and only then, think about scaling up. Build the foundation first. Everything else comes after.